Hey everyone, welcome to Market Decoded with Steve. Today we are going to decode the basics of stock market. Let's start with shares. What is a share? Share represents a small unit of ownership in a company. So assume we are going to buy a share of a company. The company can be Reliance, TCS, Asian Paints, Wipro, Infosys, anything. When I buy a share of that company, I become a part owner of that company. It can be 0.0001%, but still I become a part owner of that company. There are both positive and negative aspects when buying shares of a company. Assume you buy 10 shares of a company called ABC at rupees 100. Let's take two aspects, positive and negative. For the positive aspect, the company is performing good. The share price may increase from 100 rupees to 120 rupees and your investment can increase from 1000 rupees to 1200 rupees, giving you a profit of 200 rupees. But on the negative side, if the company performs bad, the share price can go down to 80 rupees from 100 rupees. Same with your investment can reduce to 800 rupees from 1000 rupees, giving you a loss of 200 rupees. So, you should do some good research before buying shares of any company. For buying the grocery items, we go to a small shop nearby, right? Likewise, for buying and selling the stocks of any company, there is a market called stock market. In India, there are two stock exchanges, namely NSE and BSE. These two stock exchanges forms the stock market in India. So can we directly go to the exchange and buy the shares of any company? The answer is no. We cannot physically go to the stock market. We can only access it electronically, that too via laptops or mobile phones. And we need the help of an intermediary called stockbroker. Who is a stockbroker? A stockbroker is a person or entity who acts as a middleman between common investors like you and me and the stock exchange. Any buy and sell transaction can be done through a stockbroker. They will help us set up our demat and trading account and they provide few other services as well. They charge a fee called brokerage for providing these services. What is demat and trading account? We need two types of accounts to do transactions in the market. Trading account is used to buy and sell shares of a company. The amount required to buy shares of a company will be debited from your trading account, and when you sell a share, the amount will be credited to your trading account. Okay, so assume you bought 5 shares of a company called ABC. Do you know where these shares are kept? For that, we need a demat account. Demat account is like a digital wallet which keeps the shares. Wherever there is a lot of money involved, the chances of fraud is high, right? That is why SEBI exists. It is the regulatory authority which makes sure no cheating or fraudulent activities are happening in the market. Okay, so which companies can get listed in the exchange? Any company which wants to raise capital and wants to go public will apply to get listed in the stock exchange. Once they are listed, buying and selling of shares of the company will happen regularly. So, this is how the share market works. I hope I have provided some value today. If you feel the same, don't forget to subscribe. Stay tuned, a lot more is coming.